Welcome to the much awaited budget and economic survey series. So basically, this series will not be isolated lecture class on the budget 2021 only, but rather you'll see throughout the course of this series a very integrated way of taking economics and budget. And today's class is with respect to budget session one, with respect to budget 2021 only. But going forward with this series, we'll have a new thing that we are rolling out as an institution and myself, theme-based economic survey. As in, we will take up this year economic survey obviously, but we will take up economic survey theme-wise, not chapter-wise. We will try to club chapters together, not only this year, but past 3 to 4 year, even fifth year also. We'll take some of the economic surveys. We'll discuss that as the session proceeds, as our series proceeds, right? So this is the first session of our series. So today we'll be discussing budget 2021. Now, budget itself can be seen in two frameworks. First, an economic framework, and second, as an aspirational document for the country. Now, as an economic framework, I have divided that. The budget document not only contain, what is budget actually? Budget is, we make budget in our family also, right? How much money we are getting, how much money we are spending, so as to know where we are standing, right? The same is applicable for the government also. So economic framework we also have in our home, but this is different for the government, because with the budget, government portrays its policy priorities, what are its agenda going forward in the year, and also the basis of, we'll see, basis of many recommendations of committees, commission, Niti Aayog, they try to implement those things with the budget itself, right? So that is why budget, it's not only and cannot be seen only in economic framework. It goes beyond to address several challenges faced by the economy and as well as society. That is why you will see many of the chapters from the economic survey catering to the needs of science and technology, catering to the needs of society, social justice, even polity. Last year, economic survey chapter discussed about this situation in the subordinate courts, a state of Matsnyaya, right? So that is why economy cannot be seen as an isolated discipline. It has a large integration with society, social justice, and the overall welfare of the people. That is the final aim of the good governance. Now, first we'll discuss the economic framework. In the economic framework, we will discuss basically two things. I have also tried to put a bit of concepts also here, just to explain concept with the budgetary figures. Along with the concepts, the first part of economic framework will be the concept. The second part of the economic framework will be the taxation proposal given in the Prime Minister, the Finance Minister's speech. Now, Finance Minister's speech is the key for this budget. If you see this is one of the longest, the longest budgetary speech given by any finance minister since post-independence. Now, the speech itself comprises of two parts, part A and part B. Part B caters to this area, and part B, we are taking the taxation proposal in this economic framework area, right? So just to telling you the structure. So finance minister speech has two parts, A and B, given by the finance minister herself. The A part is an aspirational document in which the priorities of India, the ease of living has been talked about. And the second part, they have discussed more of a taxation, more of economic framework. That is why I have kept that into the economic framework. Okay, so let's start. So first, we'll have the economic framework of the budget 2021. Now, in the economic, first of all, coming to the budget, first of all, it is not budget. Budget word is not mentioned anywhere in the constitution. The word annual financial statement in article 112 is mentioned. That President shall, in respect of every financial year, cause to lay before both the House of the statement of estimated receipts and expenditure of Government of India, that will refer as annual financial statement. Hence, there's a political question, right? That the budget word is not mentioned. Budget is the normal word that we use, but actually it's an annual financial statement. Now, annual financial statement not only comprises of these documents, but also comprises of all these documents. You can see right from here. First, annual financial statement, demand of grants by the ministries that are approved by the Parliament, the Finance Bill, the FRBM Act, Fiscal Responsibility and the Budgetary Management Act 2003, Okay, before starting this, some of the things, some of the prerequisites that I think you should have in economy. For example, this is a budget and economic survey specific class, right? So we cannot discuss what is fiscal FRBM Act, what were its provision. I think that should be covered on your end. But as I told you, I'll be taking a few of the very basic conceptual things that we require to cover this budget, discuss this budget. So within FRBM Act, which passed in 2003, Fiscal Responsibility and the Budget Management Act, to put a fiscal responsibility on the government that they should not overspend. We'll see that. We'll see with the concept of fiscal deficit. So two documents have to be presented by the government along with the budget. So these are macroeconomic framework statement, and second is medium term policy, fiscal policy strategy statement. So they also are documents. If you see on the budget website, I've taken everything in this class right from the budget itself. Few of the clippings of the newspaper I put, otherwise everything is taken from right from the budget itself. So these two documents are from not mandated in the, just remember, not mandated in the constitution, but mandated in the this statutory prerequisite by the finance minister. Next, the expenditure budget, receipt budget, expenditure profile, budget at glance. Many other things have taken from the key features of budget 2020-21, right? Now, this is the overall thing that we have to understand. Now, very complex diagram, as you can see, very complex diagram. Now, ultimately, till at the end of this economic framework first session, before going to the taxation part, we will try to restructure it in a way that is helpful for us to understand and also examine from the examination perspective. We'll try to understand that. So, what is it is showing that the size of budget is 30.42. So, how basically budget is size decided, how much government wants to do the expenditure. So, by demand of grants, they get the estimation of this much expenditure they want to do. So, that means 30 lakh crore, 0.42 crore rupees they want to spend. Now, this is the expenditure decided. Now, government thinks of the from where the money will come, right? Like in our household, we decide that this this year we want to buy a microwave. So, we have decided that this is the expenditure. Now, from where the money will come? So, money for the government comes from the tax and the tax receipts and the the revenue receipts and the capital receipts. Right now, the complication starts. What is the difference between revenue and the capital? We'll discuss that. So first, this is the budgetary thing that we understand till before the end of the class. That this is from where the, for example, 1 rupee, from where the money comes, from where the money enters into the this 30.42. We'll try to we'll try to use these figures 30.42, right? We'll see why also. Some trends can be asked in the examination from prelims. So this is the expenditure and this is the receipts. So they are saying from where the money comes from. So they are saying, for example, non-tax, some money is coming from the goods and service tax, corporation tax, income tax, customs, excise duty, some tax is coming from borrowings. That is the most important part. Okay, we'll discuss that. And the same thing, the expenditure part. So don't be frightened by these diagrams. We'll discuss one by one. Now coming to the explanation part start. So budget, we can divide the budget into two parts. First the receipt part and one is expenditure. Very easy. Receipt from where the money comes and the expenditure where we are spending. But the second classification is sometimes students have some logical issue. What is the difference between revenue and the capital? If I tell you with the example, I have discussed that with the example. But one thing. What is revenue? Basically, this institution, for example, is spent money, 1 lakh rupees in the buying this camera, for example. Buying this camera, this institution has spent 1 lakh rupees. So this camera is an asset for them, right? So they have bought an asset. Now, this is a capital expenditure, right? And similarly, this institution pays me the salary also. But I am here, that's a recurring money. So for that, they are not creating an asset. They are paying me every month. So that is a revenue expenditure, right? So first of all, this is how the final budget will look like. The receipt budget and the expenditure budget. There will be revenue and the capital as we discussed. There will be some parts of it. We'll discuss slowly. And the same with and this is overall your budget. This is the overall budget. right? Now, first understanding the capital revenue, as I was discussing. So, if an expenditure or you get some money or you give money to someone creates an asset or a liability, if you have taken loan from someone, if you've taken loan from someone, then it creates a liability on you that you have to pay back that loan, right? So that loan will come into the capital part. That loan will come into the capital part. But you have taken grant from someone. Someone has given it. For example, we give some charity to the beggars. So that is our revenue expenditure. That is not a capital expenditure. We are not expected. The beggar will not return us the money, right? Now we will see technically with this example. For example, India has given, for example, we opened the line of credit, right? Many of times in the newspaper, you see line of credit has been opened for many countries. For example, India has opened a line of credit for Russia also for developing its Far East. So India has given, for example, in the budget to 2020 budget, this budget. So India has given, promised Nepal that they will give the loan of 1,000 crore loan to Nepal. So that loan will be for Indian budget. That loan will be a capital expenditure for budget 2022, no, 2012 and 2013. Getting me? So India has given loan to Nepal for 1,000 crore. So that in our budget, when we are making our budget, then that means we have given some money. So that will be an expenditure first of all, and that will be a capital expenditure. Why? Because we will get that money back obviously. By Nepal ko we have given the money to Nepal. So Nepal will pay back that money, obviously. That's a sovereign country. And the meanwhile, they will pay the interest also. For example, we'll take a home loan from the any bank, right? So we have to pay interest. So, for example, next year, so this that loan part will come in here, in the expenditure budget, in the capital part, in the loan given by India. So in this, that in the budget, that will be all the transaction are classified like that. So that transaction will be classified in 2012-2013 budget. Now, next year, 2013-14, Nepal has given India back interest of 50 crore. For example, that's a hypothetical example. So 50 crore interest Nepal has given back. They've not given the money 1,000 crore, but they have given the interest back. So now where that interest will go into the budget, but it will go into the budget of 13-14. So that will go into the revenue part and non-tax receipt for budget 2013. Revenue why? Because India is getting just the interest back, nothing else. No asset, no liability, interest was to be given, like a grant you can say. Not a grant, but I'm taking nature of grant. So it is coming into the revenue part. Okay, so where that will be placed? That will be placed in the interest received here. That is in the receipt budget. We are getting the money. So receipt, and within the receipt, not the capital, but the revenue. So revenue, that is also non-tax. There is no tax on that. That's only the interest received. Getting my point? Very easy. Now imagine after a few 6 to 7 years, Nepal decided to give the 1,000 crore back to India after paying the interest, and after Nepal got some money, and Nepal decided that I will pay you back all the money. Right? So that is principal loan is returned. Now that will be included in the capital because the loan is recovered. You are getting all the loan back, right? And that will be a non-debt receipt because you are getting the loan back. That means you are not going to, no debt is on you. On you there is no debt. You are just getting your loan back. So that will be classified under, you are getting money first of all, getting money, you are getting money under the capital, and that is a loan recovered, right? That is the only way, only place where the student get confused, where to put revenue, where to put capital. Now answer yourself, where will you put the subsidies? It will be in the revenue part, expenditure, revenue expenditure. Where will you put the salaries? Salaries, as I discussed, salary will be put in the revenue part. Okay, where will you buy capital assets? When you spend in the infrastructure, there will be capital expenditure. That will be capital expenditure, right? So I think that part is clear. If you're not clear, just see the video and try to understand with the same example. Just return the video and just see the same example, right? So finally, we arrive at this this division. So quickly, we'll see receipt budget and expenditure budget. Both of the budget have some part of revenue and some part of capital. Similarly, revenue and capital. And then within the revenue, we'll see now one by one. We'll see receipt budget, then we'll see the expenditure budget. So from where the money is coming to the budget. First, the receipt budget. So receipt budget is first revenue part. So revenue part means no asset or liability created. Taxation. For example, every year you have to give tax. Or you are buying a biscuit packet, you have to give indirect tax. You are importing something from outside India, you have to pay some custom tax, right? So the taxation, two types, direct tax and indirect tax. You know everything. No? I will not be going into the taxation thing and what different type of taxation are there, what is GST. That is, again, that's a economics normal means class. And the non-tax in the revenue part consists of, where we discuss the interest received, what the Nepal will pay, the interest received. Next, the dividends and the profits of the companies and the holdings of the government. For example, RBI say or from RBI government got some money back. Controversy was there last year. So that will be in the dividend and the profit part. Other parts and the other things. For example, government itself is doing something. For example, India government publishes India Yearbook. So from India Yearbook, government gets some profit. So Yojana, Kurukshetra, all the magazines you read, right? So from where whatever the government gets the money, those are in the this non-taxation revenue receipt. And the grants, obviously, for example, we got grant from World Bank or IMF. I'm just giving a hypothetical example. If you got any grant, that will be in the non-tax revenue because we are getting the grant, not the loans. Just remember that. We are getting the grants. Grant is only one way. Someone has given you grant. What we say give to the beggars, right? The charity types of thing, grant. Next, if you see capital receipt in the capital part, so first will be debt creating, non-debt creating. Non-debt creating includes loan recovered. For example, after 6 years, Nepal has given us the loan back. So that will be in the non-debt area. Next, the disinvestment. For example, in this budget, we will see that government is going for disinvestment of LIC, IDBI. Totally, they are giving up to the private sector. So the money that government earlier, the holdings they were having, and there will be no debt created, right? Because they will get the money, hard money, right? Okay. Last year they went for IRCTC IPO, a very successful IPO, IRCTC. Okay. So that are non-debt creating capital receipts. Now coming to the debt creating receipts. Now these receipts, that means incoming money. When the government has decided to spend, for example, 30.42 lakh crores. Now how much money they have got? They have got money from the taxation. It is good if all the money could have come from tax, but it is not. Then they have to do some loan recovery. They will send the Nepal, please give us loan back. They will give this investment, they will go for, they will get money back. But there will be a shortfall. There can be a shortfall. There can be a shortfall. For example, today we'll see that obviously there is a shortfall. And that shortfall is known as the fiscal deficit, nothing else. If you exclude that, before this point, government is getting money from revenue, from tax, non-tax, before capital, non-debt and everything. Before this point, whatever money government got and whatever expenditure they have planned, 30.42 lakh crores and this much money they have got. So to bridge, for example, till that they have got, like for example, 22 lakh crores money they have got till now, till non-debt. Till non-debt they have got this much money. Now the remaining money comes only from the debt creating debt. They will take from whether from the internal sources or whether they will take from the outside. They will take some loans or something from outside. Right? So those are debt creating capital receipts because they will come from in the form of loan. So that will be a coming money receipt and the loan is there, then it is in the capital part. Getting my point? Very easy. And that is the fiscal deficit. We'll again discuss that, don't worry. So coming to the government document, what is this again the government document? So very quickly, just to understand the balance sheet, you should understand all the balance sheet of the government. First, we'll discuss that thing first. So budget is not only this thing, that the estimates of the next year. Next year means, this means from 31st March 2020 to from 1st April 2020 to 31st March 2021. This budget estimates are there. but the figures are for the last two more years. Why? For example, this year they have given this estimate, right? So now the next year the budget will come 2021, 2022, and after that budget will come 2022 and 2023. I should write it there. So after that the budget will come 2022 and 2023. So these are the estimates, but maybe some of the, you'll see some of the money that government thought that we will be able to spend on this, they were not able to spend for, or any disaster came, all their capital expenditure went somewhere else, or something happened. So what they estimated for the coming year, that was not fulfilled. So next year they will give us the revised estimate. They will give us the revised estimations. But imagine next year's budget will come one month before the final 31st. So there can be again some estimation can be there after 31st March get over. So the actual figure we'll get of this year, for example, the budget we are discussing only in this year, when we'll get the actual figures of 2020, 2021. Now getting me? Now we'll see in today's budget whose actual figure we have got. We have got the actual figure of 2018. We have got the actual figure of 2018 because finally all the actual figures we have. We will have the last year they have estimated like this. For example, this year they're making exercise on budget estimate. Last year they must have done that exercise. So those were the same figures. And these are the revised estimate that I was discussed here. Getting my point? So basically 3 figures are given for another question I've seen in one of the test series. They have asked the same question, a very conceptual question. And many of the students falter on that also. That is why I'm thinking to discuss this one. So that means one budget has the figure of 3 budgets. It should not be called budget, but it should be called the financial statements of 3 years. Okay? So actual of the 2 years back. Now coming to the different, so first is tax revenue. So tax revenue in 2 parts. First what tax, so revenue receipts 2 part, tax revenue and non-tax revenue. In the tax revenue we see corporate tax, we see income tax, we see that is negligible, you can see that is negligible. Customs, we see excise, we see service tax, also becoming almost nil because of the GST has come in, right? Taxes on the union territory. Now those are this part, direct tax and the indirect tax. So we have seen this taxation. We have seen the tax revenue receipt. Now we'll see non-tax revenue receipt. So non-tax means, for example, we will see interest receipts. We've discussed that. Interest receipts, all the things. Dividends and profit, external grants. You can see external grants are reducing. Why? As India is becoming higher, as India is climbing the diplomatic ladders, and becoming a self-resilient and having a vision of having a 5 trillion economy, obviously the tendency to get the grants from outside, loan is fine, but tendency to get grants from outside, it's obviously very low, because that is there for the LDCs, least developed economies, right? So this is the revenue receipt. So total revenue receipt they have made, that is 20.2 lakh crore. They have the total revenue receipt. Now if we see the capital receipt part, the capital receipt has the part, first is non-debt. This is the government budget. This is not my PDF. That is government. That is why I have made this to clarify, and this is the government's PDF, because if I would have explained right from here, some issues could have been there. So this is the non-debt receipt. Just one second. This is the non-debt receipt and this is the debt receipt. That is where I talked about the fiscal deficit part. We'll discuss that. So that means recovery of loans and disinvestment receipt. Recovery of loan and disinvestment receipt. Okay. So this is the receipt part. Both the receipt part. Now if we see the trends can be asked. For example, question can be asked, how much money government gets from the tax revenue, whether it is more than in non-tax revenue. So answer is, government obviously gets more money from the tax revenue, and then from the non-tax it is 3.8 lakh crore, and from tax 16.3 lakh crore. Why I'm again giving you the figures, because it will help you. don't remember the figure, just have the figure for the indicative. For example, total budget we have discussed around 30.2, right? So the total total revenue receipt we have this much, around 20.2 we have read, right? Now within that, the trends can ask how much money government is getting from the GST, whether it is more than the corporation tax or not. So that is why you need to have this one. Is this slide is important for that purpose. For example, they have estimated from this estimate of the budget 2021 that GST will give us 6.9 lakh crores. The corporation tax almost equal, 6.8 lakh crores. Income tax 6.3 lakh crores. Union excise duties 2.6 lakh crores. Customs 1.3 lakh crores. So it is a responsibility to know every tax. I hope you know every tax, right? So this is the decreasing trend. Highest of GST, then corporation tax, then income tax. Now again, just the government figure, again having budget and glance, now you can understand it more. For example, we discussed almost equal, right? Corporation tax 18% and the GST 18%. Now you can appreciate it. But still remember, GST was more. They will not ask this question, but still. Next was the income tax, right? Then we have discussed excise this and then custom. Non-tax revenues only 10% of the total thing. And this is the final borrowings also. This is the debt, capital, receipt. And this is non-debt, capital, receipt. Okay. This one is, just for example, just to reiterate, this is non-debt and this is debt. So we have the figures of both of them. Right. So now we have seen the receipt part, from where the money comes. All the figures, small figures we have seen. Again, we'll just to revise you and reinforce the idea, we'll discuss again. Now we'll come to the expenditure budget. Expenditure budget is not as structured like a receipt budget. Now these words are also used by the the budget itself, receipt budget and expenditure budget. Now rupee goes to, so where the highest amount of money goes to, for example, or these areas where the money of the government goes to. We'll discuss one by one. So for example, subsidies, defense, pension, other expenditure, central sponsored scheme, central secretary scheme. Where government wants to spend most of the expenditure, where government wants to have the most expenditure in capital part. But government where is having the most expenditure is revenue part. We'll discuss that. And that is one of the big problems in the Indian economy, because we don't have a large capital expenditure. We have a very limited capital expenditure. And that is why the government is planning to come up with the national infrastructure pipeline, so that the more infrastructure, more investment can be done on the capital side of things. So in the revenue, we have the interest payments. Interest payments means, for example, government has taken 10,000 crore loans. For example, I'm giving a hypothetical example from USA. So we have to pay them the interest every year. For example, 500 crore we have to pay every year till we pay all this the principal amount back. So this is the interest payment that we have to do, and we'll see very high amount of interest payment is there. And that interest payment is directly linked to the fiscal deficit. That interest payment is directly linked to the fiscal deficit. For example, this budget I have borrowed 1,000 crore. That will be in the fiscal deficit. Now, of that 1,000 crore, next year I have to pay the interest, right? Then that will go into the revenue expenditure. So the more you borrow, it creates an intergenerational liability. One government has borrowed and the other government has to pay. For one generation, it is called intergenerational liabilities it creates. That is why fiscal deficit is bad for economy. Too much fiscal deficit. Right? Next is subsidies. Food subsidy, petrol subsidy, fertilizer subsidy, the defense, expenditure on defense budget, salaries and pension, and the grant given. The grant given by the government, even to the outside countries, whether to countries like Mozambique, whether to countries like Bhutan, or whether to the states grant, right? And the capital part, just to the loans given, we discussed the Nepal example, the loan given, and the capital goods and asset created, finally. The highway created, the infrastructure, the shipbuilding and everything. Now, just to have the list, for example, we have this list, the expenditure of major items. So pension, you can see the amount, this amount, the subsidy amount. For example, subsidy for fertilizer is decreasing. They have estimated that the subsidizer, the subsidy for fertilizer will decrease, petroleum subsidy, you can see agriculture activities and all the other other areas. One interesting fact is for the interest, you can see the amount here, this, right, 7 lakh crores, 7 lakh crores. That is the amount we are paying for the interest subsidy. Okay. Now, composition of the expenditure, the same thing represented through diagram, something like that. These are the departments, different ministry calls for different grants. Urban development call for some money, or home ministry call for some money, external affair call for some money. Interest payment, you can see the highest taken by the interest payment, and that is a big problem. If your majority of the coming money is taken by the interest of the previous month, EMI thing, you can imagine the EMI thing. When the EMI takes away a lot of your workable money, so obviously that means you're borrowing a lot. You're borrowing too much. Something like that. Subsidy and pension. The respective block area denotes the size of the money, right? Now, composition of the expenditure, if we see, for example, see this one. So one of the highest expenditure is this central sector scheme. 6.1 is on the establishment expenditure of the center, all the administrative stuff, the pens and the photocopy machines and all these. Okay. One finance commission grant. This is to the states on the basis of the finance commission. We'll also see 15th Financial Commission has given its report, but interestingly, they have given report just for the 1 year, and the October month they will give the final report. Then again, finance commission report you have to read, right? So this is the final figure. I told you that I will decode that 30.4 to not 30.2, it was 30.42 figure into this figure. I've simplified it for you. Now, this was the final budget. Okay, please pay attention here. So this was the final budget. They have decided to spend 26.3 on the revenue expenditure, out of which we have discussed 7 lakh crore was on the interest payment. We discussed that. 2 lakh crore on the grant to states. Now, we have put that into revenue, no, just a bit, a relatively small concept. For effective revenue deficit, we have to see that. Now, government says that you have put all the grant given to the state in the revenue part. You are saying they are not making any capital expenditure, but they are arguing, government argues that whatever the grant we have given to the states, for example, the Modi ji has given some grant to the Yogi ji, state to grant. Now Yogi ji is with that grant he has got, for example, my father has given me some pocket money, he's not expecting me to give it back, but I'm with that pocket money, I'm buying, for example, a book, an asset. I'm not spending it on the movies and all. If I'm spending on the movies, that will be revenue expenditure. But I'm buying books. I'm buying a laptop from my pocket money. So that is the same thing with the state expenditure. Yogi ji is using that money to build infrastructure. That grant he is getting from the Modi ji, from the center, he is using the same grant to build infrastructure. That is why the concept of effective revenue deficit has come. We'll discuss that. And the remaining are 17.3. For example, the defense, the salaries, and those are the other. 4.1 is the capital account expenditure. So this is the total expenditure. Now, question comes from where the money will come. So, out of the 30, 20.2 money has been given by the revenue receipt, comprising of the tax and the non-tax. Comprising of the tax and the non-tax. Tax means the direct tax, the corporation tax, the direct tax, indirect tax. We have seen the direct tax, corporation tax, income tax, and the indirect tax, GST and all. And 3.8 is the non-tax, right? Remaining 10.1, 10.21, because ultimately budget has to be zero. How much money is coming in should be out. So budget deficit, always imagine budget deficit is zero. Obviously, your family is spending 10,000 rupees. So that means they are having 10,000 rupees by any means. By any means they are having 10,000 rupees. We'll discuss what any means. So, for example, your father's salary has given 10,000 rupees you have spent. Your father's salary has given you only 5,000. Your father's salary has given you 4,000. Your mother's salary has given you 4,000. From where these 2,000 will come? So, your parents decide that we will borrow from someone. Right? We will borrow for someone. The 2,000 they have borrowed. Similarly, government. So they are getting this 20 from the tax, okay, fine. They are getting this recovery from the loan. They have got Nepal to give the loan back, fine, no issue. 2.1 for the other receipt, no issue. But from there it isn't. Now from where they'll get the money? Now, for example, parents need 2,000, they'll borrow. Similarly, government borrows this 7.9 crore, 7.9 crore they borrow. I've made it a mess, the diagram itself. The 79.9 crore they have borrowed to fill that gap. To fill that gap, finally, how much they are spending and how much they are getting, to fill that gap, to make budget deficit zero, they have to spend, they need to borrow 7.9 lakh crores. And this 7.9 lakh crore is nothing but fiscal deficit. But that's very easy. If you see structurally, it becomes very easy. Now coming to the fiscal deficit, this is the 7.9 lakh crore, the same amount I was discussing here. 7.9 lakh crore, the same amount I am discussing here. That is 3.5% of the India's GDP. Right? Next, the difference given in your budget is the difference between the revenue receipt plus the difference between your revenue receipt plus non-debt creating capital receipt and the revenue receipt plus the non-debt creating capital receipt and the total expenditure difference. Now you can see very clearly difference between this revenue receipt plus non-debt creating these receipts. We've discussed debt creating, non-debt creating. So add these two and subtract from that, you will get which amount? You will get this amount only, because ultimately both are equal, both the sides are equal. So that is fiscal deficit. Now we will see one second concept, revenue deficit. Revenue deficit refers to the excess of the revenue expenditure over the revenue receipt. So what this is the revenue expenditure, just one second. This one is this one is revenue expenditure and this one is revenue receipt. This one is revenue expenditure and this one is revenue receipt. Now the difference between these two is your revenue deficit. Very easy. Now you know. So answer will be 6 lakh crores, around 6.1 lakh crore. And you can see from here 26 minus 2, it is around 6 lakh crore. So revenue expenditure minus the revenue receipt. Right? Next is effective revenue receipt. So I have discussed that. For example, someone says that the government argues that the grant we have given, for example, everything you have considered here, but some of this money is also going to make some capital. So reduce that money. Reduce that money. So they are reducing this grant that is used, that state used for the capital assets. That is state used for the capital assets. And if we minus that, for example, if from the 6.1 lakh crore, if we minus that 2 lakh crore, what will come? Our effective revenue deficit. And this is 440,2719. 4 lakh crore basically that we discussed. So you get the very easy, right? Then we get the primary deficit. So it is fiscal deficit minus the interest payment. It is the total fiscal deficit minus the interest payment, the primary deficit. Okay, so fiscal deficit was the total borrowing that we did minus the interest payment. So what the primary deficit will show in actuality, how much you have borrowed for this year. How much you have borrowed for this year, because interest payment was the borrowing done by the previous government, for example, previous government which was there in the last budget cycle. How much, if you want to take the performance of this government, you reduce that fiscal deficit, may say you reduce the interest payments. So now you will get the primary deficit. So for example, this is the fiscal deficit 7.9. Reduce the interest payment. So what the economists argue that if you want to see the functioning of a present government, if you want to reduce that intergenerational liability created, if you want to see the current, for example, one government says we are doing really well, so test their primary deficit. So their primary deficit will come out to be, if you reduce that, then this one 88,134 right? Because you can see here from 7.9 is the physical deficit and 7.7 is your interest payment, so it will be 0.9 around. So the facts are also pointing to the fact, right? So if you read your budget from this perspective, having the analysis of the figures right from the budget itself, and when the theory and the practical matches, it gives you a more integrated learning, right? Now, if we see the trends in the deficits, for example, you can see the fiscal deficit has been reducing. In this area, you can see high deficit. Why? When the global financial crisis finally struck India, and the government went for fiscal stimulus. For the fiscal stimulus means government expanded their spending. Oh, no issue. We will expand. We will spend. हम infrastructure create करेंगे. We will do infrastructure creation. We will put money into Manrega. We will give money in the hands of the people. Manrega, we will give money. We will not worry about because if they will not do, economy will be shut down, right? So when the global financial crisis hit India, that is why we can see high levels of these expenditure rates. These deficit rate. Then finally we brought we improved and we tried to improve upon it. So this year they have planned, for example, 2.5%. Ultimately, they want to reduce this primary deficit to the zero. They want to reduce that. The vision is to reduce at least the primary deficit to the zero, and this effective revenue deficit also to the zero. So for that, you need to see the N.K. Singh recommendation. Just write, copy that N.K. Singh recommendation, what he has given for the FRBM Act. We'll also discuss some of the recommendation in the current affair classes going on simultaneously on this Amrita YouTube channel, right? So what are the recommendations of N.K. Singh? He called about having an independent fiscal council, changing the parameter right from the fiscal deficit to the debt to GDP ratio. You'll see something. So just to finalize, we have seen the receipt part, we have seen the expenditure part, and finally we have finalized with a simple figure also. So if we see budget at glance here, so this is the revenue receipt, capital receipt, tax revenue, non-tax revenue. Capital receipts are two types: debt creating, non-debt creating. This is the debt creating. 7.9 is our physical deficit, 7.9 lakh crores. And if you see the expenditure part, so the revenue account, the interest payments, the capital account, and finally the calculation of all the deficits. So if you want to check again your conceptual clarity, I'll want you to just stop the video right now, pause the video, and try to see that if the thing, for example, they've said decrease 10 minus 1 for revenue deficit. So if you're able to do that, that means all the concepts are clear and you're done. I think you should pay more logical attention to it instead of cramming it. If you know it, then economics is more about understanding. I know it's one of the technical subjects of UPSC and one of the trickiest also, but I believe if you take the conceptual part in, that means economy will sail through like anything, okay? And it will reduce a lot of headache also. Again, the whole thing summarized in one slide. So we have seen all the budget, the economic framework of part 1 of the economic framework is over. Now we will discuss the part of the Nirmala Sitharaman, the second B part of the speech, where she talked about the taxation proposal, for example, decreasing the corporate tax, right? So now we will see the second part of the class, second part of the economic framework. And after that, we will move on to the aspirational document, the main stuff, right?